May I request everyone to have a seat, please? Whoever wants to have a cup of tea or coffee, they can fetch it from there. And if you could kindly have a seat so that we could start our session. I'm going to skip the introduction. Obviously we're running quite late. I've got 4 excellent panelists here who obviously need no introduction at all. And I'm sure in case if you want to have one-to-one, you can always do that during the lunch break. I think the word redefining or reinventing the wheel has become a fashion buzzword, whether we talk about the conventional or Islamic banking or even the asset management. And I would like to invite my expert panelists here if they could share with us their views as to how they would like to redefine the asset management. How do they see the evolution of asset management from the Africa region perspective? And if I may start, as we always say, ladies first. So if I could start with Dr. Anna Armstrong to share her views, on the asset management, and if you could also touch upon on the portfolio management side as well, please.
Thank you, Waheed. I think we have initiated an interesting question just a few minutes ago, and that is, when are investors, institutional investors, going to be more interested to invest in Africa, and not only in Africa, but in other frontier countries? And we can actually go back to a similar example of emerging markets. In 1994, emerging markets were at a similar situation as frontier markets these days. So a little bit more was invested, something like 400 billion back then. But if you look at frontier markets, they're going through similar changes. They're liberalizing their economies. They're becoming part of the global picture. They're also rich in natural resources. They have also different sources of return, and they're not correlated with each other. For example, African countries benefit a lot from natural resources, while Asian frontier economies, they benefit from low manufacturing costs. So, for example, now costs of production in China are the same as costs of production in Taiwan. So Vietnam is going to be a beneficiary. So going back to the portfolio construction role, which actually is my specialty, I'm a quant by training. Most investors are looking at how to optimally allocate between asset classes and between the countries within those asset classes. Interesting story that we have is that emerging markets have already gone through that period of exponential growth, and now the growth is much more even in those countries. And they're becoming much more correlated with developed markets. So they're not providing a huge advantage when it comes to portfolio diversification. On the other hand, frontier markets, such as African countries that we are discussing today, they do show low correlation amongst other frontier markets, and also they're not correlated with developed markets to such a great extent. So I believe that interest in these markets is going to increase, and I believe that investment advisors that we did mention will start looking at these countries because they will need new sources of alpha. Although these markets have even few billion of the world population, their market capitalization is only 3 to 4%. And I believe this is not sustainable. And I believe they're just at early stages of investors' interest, and that we're going to see huge growth in capitalization within these countries over the next 2 decades. They also have a lot to learn from experience of emerging market countries. So they have 2 advantages. First, they have emerging market economies that have gone through a similar period of transition. 40 years ago, we did not think of investing in Russia or China, and now we can see that they're significant players in many investors' portfolios. So they have a huge experience to learn from. And also, the inflationary environment and macro environment is much more favorable now than emerging markets had when they were going through the period of expansion. But now I think that developed markets and frontier markets are also becoming more integrated, and they actually need each other, because a strong emerging and middle class from frontier markets is going to present important client base for many Western companies. That's exactly what happened with markets of South America, China, Eastern Europe, and so on. Most Western companies are seeing huge profit growth from emergence of that middle class in those markets, and that trend is going to move to frontier markets and Africa. So I think that the relationship is going to grow because there is a need from both sides.
Okay, with that, if I could move on to Paul.
Yeah, there are two things that I want to add to that. I think that the picture of the asset management space in Africa today, at a macro level, is mixed. The picture is mixed because, and I have to praise Razia for that, because Razia was showing that picture where we have seen the savings declining over the last 30 years in Africa, and that's the true picture, because if you compare the savings as a percentage of GDP from 1970 till today, in Africa that ratio has declined from, let's say, 20% to 16%, but at the same time in developing Asia that ratio has significantly expanded from 30% to almost 50%. So from a macro perspective, the asset management space today is showing a mixed picture. But from a micro perspective, and if you are on the ground, certainly things are moving in the right directions. And I always like to share two examples, which are, for me, very, very, very strong, and we have some strong views on those. The first one is, if you take today a banking account of an HNI in Africa, probably 90% of the banking account is going to be in cash, and only 10% in retirement product or equity or bonds. If you compare that to what you have in developed markets, for an HNI, you certainly have only 10 to 20% in cash in the banking account, and the rest of the money is indeed invested in bonds, equity, or retirement product. So the shift from where we are today in Africa towards that, what we are seeing in the mature market, is, for me, indeed a great potential. And that's where I think that the trend is growing. A second thing that we are noticing on the ground, and I'd like to emphasize on that, is the issue about the insurance, which is also beginning to make the difference in terms of asset management. The insurance sector is growing fastly and very strongly in Africa, and we all know that in a development story, there's always an inflection point where life premium, where they bypass a specific level, where we see very fast growth in terms of asset management and in terms of asset ownership. And that trend is also a very positive trend. So macro level mixed picture, but on the micro level, I do believe that there are good trends that are going into the right direction.
Good, thanks. When you say the savings trend is declining, obviously people are spending a lot. Do you feel people are spending in the luxury items or unproductive areas? Are they really investing into productive areas, such as the building of their productive assets, or investing into some of the maybe good investment area so that they can enhance their returns on medium to long-term basis?
Well, the issue about savings declining for me is not relating to what else people are doing with their money. I think basically what is happening is that the GDP is rising faster than the savings. That's number one. And number two, I think that we are yet to capture all the benefit of the pension systems in different countries in Africa. Because if you take a country such as Nigeria today, if my memory is right, the pension industry is growing at probably 30 to 35% per annum. And I think that the pension industry is now close to 30 billion or even more, 30 billion US dollar. I mean, in Nigeria only. And if you South Africa is close to, sorry, I'm looking at you, but I don't even know if you're South African. Apologies. But in South Africa, we're talking about 150 billion US dollar, for example, or even more. So I think the declining trend of savings compared to GDP is also the reflection that we are not capturing yet all the growth that we are seeing in the pension industry.
This is very, very interesting, because here we are talking about savings to GDP. Yeah. Most developed economies are just talking about debt to GDP. And obviously, the economies we are discussing here today have much healthier balances and levels of debt that cannot be compared to those of the Western economies, which means they can invest more in their infrastructure and actually become more viable investment solution for the West.
No, you're fairly right, but that's more from, if I may say, from a macro perspective, because you need to look at the GDP, the debt per GDP. But if you want to look at from an asset management perspective, one fundamental driver that you need when you want to anticipate where that industry is growing is indeed to see if the mass of savings is in the right direction or not, because that's where we are getting our asset from. Absolutely. So that's where I think that we have a mixed picture in Africa.
Yeah, otherwise, you were suggesting, I think it'll take you to lots of different debacles of deficit situation. With that, if I could move on to Salami, so if you could have your views on that, please.
I mean, part of, when we talk about the asset management industry in Africa, it's a relatively new industry, and it's showing quite significant growth, but it's like, we're talking about an industry that's probably only about 10 years old. And while it is growing at a very fast rate, it does face very, very significant, there are some structural problems which are affecting the growth of the asset management industry in Africa. When I started off my career as investing in Africa, not so long ago, there were only about 4 funds globally that you could refer to as Africa-dedicated funds. Today, in our database, we probably track about 80 funds, which are outside Africa, which we will call Africa-themed funds. The challenge with most of them is that their size is small. Most of them are sub-$100 million funds. And some of the problems they face, a big one tends to be that we have a deficit of human capital skills here. If you remember these children games that you have at parties of musical chair, where the music stops and then somebody is left without a chair. In the asset management industry in Africa, it's actually the music stops and a heck of a lot of people there are more chairs than there are people. So you keep getting new teams. Every time you have a team that's incubated in a large asset management company, once they've got 2 or 3 years of personal, because if you invest with Templeton today, the track record of the fund it belongs to Templeton. Whereas what you find in the Africa asset management industry is that the track record belongs to the manager. It carries it as his own personal brand equity. So once he's developed a 2 or 3 year track record, he moves on. And so you end up with a lot of funds which are broken up and don't actually generate the size that then allows big institutional investors to be able to make allocations to them, because the institutional investor says, I don't want to be more than 10% of your fund, or I don't want to be more than X% of your fund. Our second challenge that I see affecting the industry is the weakness of benchmarks. Again, in our work, we look at about 8 and I'm talking about real international benchmarks here, coming from people like S&P, Standard Bank, MSCI, about 8 different benchmarks. Now, if you looked at the performance of those benchmarks last year, each one of them calls itself an Africa fund or an Africa index. The performance ranged from an Africa index, which gave a performance of 14%, to an Africa index, which gave a performance of 48%. So if you are someone looking to assess a manager, you have a challenge of what benchmark are you actually going to use? If there is such, because the definition of the benchmark, the definition of what is Africa, what goes in, what makes a company an African company is actually not very well settled. And the last big problem I think that the industry faces is the lack of diversity of products. I think in the equity space, There is, and I talk about both listed and private equity. There's now a good enough number that you could do a manager selection search. But if you started talking about wanting to look at other types of opportunities in the debt space or in real estate, or, I mean, there's no depth. And that again begins to, because you need, I mean, you can't really talk about asset allocation decisions in African asset management because there's not enough products that allow you to be able to make those decisions in any meaningful way.
Sure. Thank you so much. I think you raised some very interesting points here, particularly the shortage of human capital. I think if we look at any growing or underdeveloped or developing economy, you will always have that challenge. And we see that not just in a country or at a country level, but we also see within certain sectors. For example, look at the Islamic banking, which started growing at a very good pace for the last 40 years. But today, even we don't have enough capital or human capital in that space. And I think the developing countries are facing the same issue. And I think that should not really deter you from developing and growing further and further. And I think you should move on with the same momentum as you're doing. With that, I would like to move to our next speaker, Mr. Alexander Trotter. If you could kindly share your views on the topic, please.
And I think my suggestions, advice given from the outside were, if one is looking at asset management in Africa, one should perhaps begin to learn some of the lessons of asset management outside Africa, which to me has generally been characterized as a pretty poor industry. And it's an industry which has not served its clients well, whether they're institutional or retail. It's tend to overcharge. It's tend to stuff product down the face. It's been product-led rather than maybe investment-led. And I think Africa in many ways has the opportunity to learn from that. One has to look at some of the fees being charged by some of the sort of the investment trustees in Ghana, which are kind of sort of shocking. I think that's, if one looks at the UK, I think one of the biggest fiscal stimuluses that's occurred to the UK in the last 5 years has been sort of mis-selling money, getting itself back into people's pockets. I would urge African asset managers, which I think there's a growing and interesting and vibrant community, to look at what asset management is really its job to do. Asset management should be a very simple business. In this part of the world, it's been complicated enormously. It's become an industry when it should be, probably a partnership-based structure. So I would welcome the growth of locally based businesses, people with good local knowledge, who help. I think in Africa, again, one's in the business of making money, but locally invested capital, whether it's going into infrastructure bonds in Nigeria or directed savings, is a critical part of the development path. And I think we are beginning. I think there are exciting things happening in a country like Nigeria. The rapidly growing professionalization of the industry there. So I think my thoughts would be, don't follow necessarily almost the terrible example of certainly institutional, professional, and retail asset management in Europe and the US. Do look upon the asset management as a way of assisting development. And for those looking outside, there are some good African-based asset managers outside Africa, but I think also there are a growing cohort of interesting people to be looking. And certainly if one's in the fund-of-fund world, which I'm not, I think almost the sort of the rationale for a fund of funds in Africa is to look at some of those smaller country-based managers who may at times have an interesting information advantage.
Thank you. I think what I would like to do is maybe change the style slightly. Rather than me asking the question, I think I would like to open to the floor first, and then I'll go down to my list of questions. So who would like to go first? In the middle, please. Could we have the mic there, please, in the fourth row?
To the last speaker, I think you're right. I think the managers in Africa need to look at what is good in the West and take that and be careful not to follow what is not so good. As both, I've done some work in the past for the regulator in the UK, and there's a lot of how do I put it, both on the retail side and on the institutional side, there's a lot of overcharging, there's a lot of, how can I put it? If I consider the retail sector, there's a lot of contracts which are unfair. In fact, that actually also happens on the institutional side. And you're right, it's an industry here and it works well, but there are some warts in it, and it would be good if the African markets do not copy the warts. Thank you.
I think I would agree with both of you, Shola and Sandra. Sorry, I think my personal view on that is if there is any malpractice or any unfair treatment by any of the service provider, then I think they are hitting themselves, in the wrong place, because those sort of things or practices cannot last for long. The investors and the market, they get to know that very, very fast. And I think those institutions or the people who do those sort of things, they do not last for long in the marketplace. Would you?
Managers tend to move with the assets, and then somebody else emerges. We do not have a templeton with who owns intellectual capital. And I think actually that is very good if you assume it's only the beginning of the development of market capitalization of the country, because a lot of competition amongst the managers clearly is going to influence the price as well.
I think that leads me very nicely to my question that obviously the Africa continent is growing much faster than the developing economies. Now, obviously, that will bring in a lot of new breed of asset managers. From your perspective and from your experience, what do you really define a good characteristic of a good asset manager? What sort of practices they should have? And do you really feel that because there is a growing continent and people are going to get into the habit of creating new asset management firms, there will be new asset managers, so they may adopt some wrong practices as well. Do you feel there is a danger of being overcrowded in the marketplace? Do you feel that the industry will go haywire because of that?
To worry about overcrowding. But when we think about the mistakes and experiences, we can always compare frontier markets to those ones that have just emerged. And from investors' perspective, the biggest issues when investing before in China and now in African countries is corporate governance. So they want to make sure that they can trust the numbers and the balance sheet and everything else of the company. And second issue investors have is the capitalization. So it's not that they do not believe in the market, but a big institutional investor does not want to own the market. Sure. So I think these countries are becoming increasingly important in portfolio context. And when we talked also about the benchmarks, if you look at a portfolio in a global context, your risk is not just measured based on how your manager in Nigeria performs relative to some local benchmark, but how that investment behaves relative to all other investments within your portfolio, and how much of the risk reduction it is providing, and what is the potential for the extra return.
Anybody else would like to add anything?
I mean, what makes a good manager, I suppose it depends who's asking the question. If you are the investors in the fund, you say, well, give me high returns, low fees, and low volatility. If you are the, if you are the manager, your perspective of that question would be different. I would guess the challenge we face, I mean, especially with sort of talking about the asset management industry in Africa, in particular local, the development of local managers, is that although a lot of African governments and a lot of African countries have gone through very, very serious and significant institutional change, both at the political level, you still find that in the DNA of the political class in Africa, there is a reluctance to accept the open, unrestricted workings of free markets. So the idea of, if you were talking to an African president or an African policymaker that that they need to develop strong financial markets, that's not their first, they don't, I mean, if they do, it's an accident. It's not as a result of, it's not a conscious policy-making decision that, oh, we want to have a local asset management industry, we want to develop a savings industry. You will do it in spite of the government, not because of the government. And the misunderstanding that people have there is failing to appreciate that the role of financial markets is financial intermediation. That's all they do. Okay, people who work in it get paid a heck of a lot of money for doing this, but their job is to move capital from where it is in excess to where it is in deficit. And what a good financial market would do in an African country is ultimately to help to lower the cost of capital in that economy. And if it lowers the cost of capital in that economy, then it allows the economy to grow. So, but what we've tried, our funds are concentrated on servicing investors who want to gain access into the markets. But we've tried to work locally to set up local asset management businesses, but you find that the regulatory environment is just such a huge challenge that at the end of the day, you decide, we felt that given the pool of money and the limited amount of resources we have, we are better off working in an environment where we felt, at least even if the government's not supporting us, it's not inhibiting us. But probably the biggest thing, I suppose, that is happening in the industry in Africa would have to still be the issue of the pension reform. That the pension reform might eventually lead to a development, a pool of capital that actually needs to be managed. And if it is that big, government will look at it.
Thank you. I think with that,
anybody else would like to add?
Yeah, I want to add to what Ayo has said, and indeed, in terms of structural reforms, we need some macro reforms that need to be put in place to make sure, for example, that we allow pension funds to invest outside of their domestic markets. That's, for me, one significant angle that we need to focus on from a policy-making perspective. But from an on-the-ground asset manager perspective, I strongly believe, and I'm going to be very blunt with myself and with us here, I strongly believe that local asset managers still have a lot of work to do in terms of raising their standards. And I can speak about it because I went through the same process, basically. I spent 20 years abroad, went to Africa, and trying to build up the asset management business. And when usually you go into some asset managers in Africa, you can see that there's a lack of experience in terms of portfolio management. You can see that there's a lack of compliance to higher standards. And basically, let us be blunt, if you are a global asset manager and you want to do some due diligence on some local asset managers, definitely they're not going to pass it because of lack of some operational issues or lack of some risk issues. So some work needs to be done, and that's what we have tried to do in the last 2-3 years. Some work needs to be done in terms of raising significantly the standards in terms of how they are managing or how we are managing our portfolios. And I'm going to give you our own example, which is very simple. There was a team, when I joined, there was a team of 12 portfolio managers. Unfortunately, I have to go through a transformation plan when we have to exit some of them and to bring people that are strong enough and that are real portfolio managers that can do that job. So the first leg is indeed, in my opinion, is to change. The second one is to incentivize, because some asset managers in Africa, you still don't see that link between the track record that they are bringing into the fund and how they are paid. And I'm talking about some basic things that you are supposed to see in an asset management space and that you don't have in some asset management companies. So that second link needs to be done as well. And then you have to grow them. You need a good mix of strong analysts, strong portfolio managers that you can find on the ground, and people with some international exposure. And that mix is what's working locally currently.
I think that's where the transformational leadership comes in. Alexander, would you like to add anything to that?
I think it's, asset management is one of those industries where the old adage of keeping it simple is very important. So if you're looking for an asset manager, you should come across someone like my colleague to the right. A clear philosophy, a long-term approach, That's what you want on your investment. As I said, overcomplication, turning asset management into a product which needs to be rammed down people's throats, overemphasis on thematic investing, I think are the great ills of our age. And I think anyone, particularly maybe people who are looking with a global perspective, I mean, there's a wonderful product issued by Vanguard, which is, I think it's called their balanced fund, which is sort of 60% S&P, 40% Barclays Ag or whatever, which actually for many, particularly I guess probably in the hedge fund world, has been very difficult to outperform, yet its fees are very small. And I think anyone allocating needs to almost bear that as the ultimate benchmark in mind and seeing what is really the rationale to go beyond it. And I think, as I repeat, and to emphasize what Trotter says, I think equally, the protection of retail investors from the excesses of the asset management industry is something which I think regulators in Africa really need to take seriously to avoid the repetition. We've seen, if you were in Nigeria in 2006, 2007, when the banks were handing out margin lending, in a completely uncontrolled fashion, it was an accident which really was very clearly about to happen. And I think a strong regulatory structure, and again, one sees some people doing great things in regulatory matters. I think even the way that banking regulation, again, maybe we take Nigeria, has been has changed, shows what can be done and should be done.
Yeah, I think strong but right size of regulatory framework is absolutely necessary. Can we have the last question from the floor, please?
Yeah. I would like to just address, I hear a lot about asset and wealth management in emerging economies, underdeveloped countries, but at the same time, we hear a lot from, we've heard from previous panels and also this one, that there is a need to address local culture, obviously learning from firms here, but address local culture, a local way of developing the business. And what I'd like to know is if you say that psychology is so important, that it's not all about money, but it's also about addressing the needs and the psychology of people on the ground in Africa, at which point do you stop telling them that they're underdeveloped, that they're emerging markets, and that they're actually they got there, they have the skills, they have the people who are there to develop the products, the firms, as Mr. Trotter pointed, that it's a lot more simplified, that they have good people on the ground, and at which point do you stop using the terms underdevelopment, emerging, and as UK-based firms, if you say that the growth rates of capital savings, GDP in Africa is much higher than in Europe, and that these countries are at the top of your strategy list, and that you want to tell them that they're better as investment vehicles for you than what you can do at home on your domestic markets, at which point do you make that clear to them and help them understand that maybe they got there and maybe better confidence.
These terms, frontier, emerging, developed markets, it's always relative. I mean, when I was a master's student, Foreign and Colonial, one of the UK asset managers, they used to run adverts where they said, "We invested in America when it was an emerging market." So I guess they'll get a chance to do that again at some point. So the terminology is always relative. I think at the moment the segmentation of this market is always done basically on GDP per capita. That's the rough thing that we always use. And so it's always the question of, and it's never absolute. So if the European economies or the advanced economies are really demand constrained, as they appear to be now, and Africa, if one projected another 50 years forward, if the relative growth rates change, or the relative growth rates of these economies stay the way they are, that the Africans continue to grow at 6%, while the European and the US economies grow at about 2%, then I guess maybe in 50 years, we'll call the Europeans the emerging economies and the African economies will be the advanced economies. It's a relative term of description. What are clear is that there are some benchmarks that that you expect in in a market that you would call fully developed. And a lot of the African and emerging market countries don't have that. Either it's benchmarked in terms of liquidity, benchmarked in terms of regulation, benchmarked in terms of ease of market access. Now, those are things which can be fixed. But whether fixing them would then mean that you get graduated into the developed market status, I'm not sure.
Sure. Thank you. With that, I would like to ask you the last question. Do you feel Africa has adequate market infrastructure to develop to attract the portfolio, capital? And this I'm saying due to the poor, liquidity and exchange rate mechanism that is, existing there at the moment.
Yes, I mean, I think the markets, what markets you need is just a mechanism to allow demand and supply to be met. A lot of the time when people say, oh, we can't invest or the markets are too small, it's a euphemism for saying either that it's difficult for us to invest or we don't want to pay the price that we're being asked to pay. If the markets are open, and when I started, the problems were that you didn't have proper settlement systems were very anemic, so you had physical trading of shares. So this created problems in the settlement process. You had challenges with custody. You had challenges with market information. Today, all these markets are on Bloomberg. You have electronic delivery of scripts. You have centralized depository. So the infrastructure of these markets, I can sit in my office and I can trade directly into the Nigerian market. If you're in New York, that's exactly what you can do as well. So I don't understand why the infrastructure is no longer, the infrastructure is there to accommodate this flow.
But you have the issue of poor liquidity and the exchange rate pressures. So how do you overcome that?
Liquidity, liquidity, it's a reason when someone doesn't want to invest, then it's a problem that you will highlight. There's not sufficient liquidity in these markets. If you want to invest in Africa, if you want to build a portfolio of if you want to build a $1 billion position, even in London, you don't do it on one day. You will take time to build that position. It might take you longer. What we're saying, but you can build you can build those type of positions in the market.
Anybody else from the panel would like to add? Paul?
Market infrastructure, in my opinion, has improved and is largely fixed in terms of ability of trading into African markets. Key issue remains, and I was expecting us to spend more time on it, is benchmarking. I think it's a major issue, especially from an asset management perspective, because let's say that you want to play into the local currency bonds market in Africa today, you don't have a benchmark. Okay? So you can't say that you can be an active asset manager in that space. For the FX issue that you raised, I think in mainly all the countries today, except few ones, and except the Euro-peg countries, you can go into and take your money out. I'm not going to talk about Ghana because Ghana is going through a specific situation today because of that, because of the latest development. So the FX issue is relatively relatively fixed. The last point that you have raised, which is a complex one, is liquidity. Let us not waste time about that issue because in any case it's a long-term issue that needs to be fixed. But I think that there's one thing that can be done practically, and that will deploy liquidity into the market. And I'm coming back to that because we strongly believe that should be the way forward, as South Africa has done, is indeed to allow investors, asset owners, to go beyond their domestic market. That's a way that can bring liquidity into the market instantly. So if you consider those four elements, I think very clearly what we are seeing in Africa is going into the right direction.
I think it's because of that reason the African governments are investing and more active in the euro bond market as against the local. Anna, would you like to add anything to that?
I just mentioned that frontier markets in general have almost 30% of the world population, 10% share of the world GDP, and only 3 to 4% of market capitalization. So we believe that trend is going to grow over the next decade or two, and a lot more intellectual capital will be sent by international companies on the ground. Because currently, many large institutions have frontier market funds run from London or New York that invest in all different frontier countries, which is a challenging thing to do.
Thank you. I would like to thank all my panelists for their excellent input and insights, and appreciate their views on that. If you can represent. And before I go, I would also like to apologize that I'm sure there were many questions from the floor which I could not take due to the time constraint. So hopefully we can deal with those questions over the lunch break or maybe in one of the tea breaks. Thank you so much.